The market stopped, paused for a little bit, and then started to sell off. I did that. Who are the bag holders? That's number 4. Who are the bag holders for this? Well, it's not you. It's not me. It's China retail. China retail was buying gold hand over fist to the point where spot was trading above futures, which forced refiners to produce gold at a faster rate, which forced people to roll their futures forward to make delivery, which created a short squeeze. There did not need to be a short squeeze in China. There was a short squeeze in China. And the big banks, probably JP Morgan, Bank of America, the big bullion banks who know what they're doing, stepped in, let the market go higher, and then gave it to them. That's how it works. That's what happened.
The price of gold has surged to an all-time high, buoyed by a decline in the U.S. dollar, with traders increasingly betting on a Federal Reserve interest rate cut in the coming year. Gold prices soared by as much as 3% in Monday's trade, reaching $2,135 per ounce and surpassing the previous record of $2,072 set in August 2020. Recent investor confidence has grown in anticipation of the Federal Reserve's potential reduction of borrowing costs as early as March next year, following aggressive interest rate hikes to curb inflation. Despite analysts' expectations of a further climb in gold prices, the precious metal unexpectedly fell by more than 2% after hitting an all-time high on Monday. However, the retreat in zero-yield bullion stabilized above $2,000 an ounce as traders adjusted their bets regarding the timing of the first rate cut by the U.S. Federal Reserve, now projected for early 2024. Vince Lanci discusses recent market shifts, emphasizing the sudden decline in gold and silver prices following an initial surge. He anticipates a potential strategy involving the deliberate sale of silver to exert downward pressure on gold prices. Highlighting China's significant impact on market behavior, Vince emphasizes the anomaly of increased buying activity in the physical gold market, uncommon compared to the futures market. This surge in buying was triggered by aggressive gold acquisitions by Chinese retail investors, leading spot prices to surpass those of futures contracts. This unexpected surge compelled gold refiners to ramp up production significantly. Consequently, traders needed to roll their futures contracts forward to meet delivery demands, resulting in an unforeseen short squeeze in China's gold market. Vince speculates on the intervention of influential entities, possibly major banks like JP Morgan and Bank of America, strategically intervening in the market. Their orchestrated actions seem to stimulate an upward surge before executing a planned sell-off, suggesting a deliberate manipulation of market dynamics to their advantage. We will present clips from Vince Lanci with Arcadia Economics. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you and enjoy the video.
The market stopped, paused for a little bit, and then started to sell off. And now, from being up over 3% last night, gold, the market is now down 2.25%. So, and silver is now down 4% after being up only 2%. The first thing I want to say to you is this. There's so many things I can say, and I'm trying to be coherent. First thing is this. Silver is going to be used to hammer gold now. Silver will be sold to get gold lower. That's the first thing. The second thing is, just to getting it out of the way. Second thing is, let's go over what happened last night. The Chinese buying is ridiculous. It may be right in the long term, but it's wrong in the short term because physical gold market was trading over the physical, the futures market. Now, you can have that happen in silver, okay? You shouldn't have that happen in gold. And sure enough, it brought out a lot of buying that built up over the weekend. And that buying went to the market Sunday night, our time, Monday morning, their time. So that's why I said, let's see what's going to happen Sunday night. Let's see, how smart or stupid people actually are. Sure enough, the market gapped open. That's a 3-minute chart. The market gapped open a little bit higher. It covered the gap. And then I thought that was it, right? That's what I thought anyway. But it wasn't. China stepped in and really went to the market, and that's basically the chart of the gold market on the high. Now, silver never got up to those highs. Silver did not outperform because this was purely a gold move, and silver tracked it. And this is because China was buying. Now, I wasn't predicting, as I said, 645 last night, but that could be it until US time. Right now, the PPT is being called and Benoit is awake. We're not going to talk about who Benoit is online anyway, but we're just going to say that people that have a vested interest in the price of gold not getting into headlines in the West were activated last night. Those people, if you remember the silver tamp down, are related to, but not the same people who had a vested interest in silver not cracking the market when it went to $30 the other night, last couple of years ago. Same idea, same behavior, different people. There's a lot of similarity between what happened last night and what happened during the silver tamp down event that Chris Marcus cataloged so well for everyone.
Amidst ongoing conflicts in regions like Ukraine and the Middle East dominating global headlines, the world's stability feels increasingly precarious. These conflicts span various dimensions, reaching far beyond physical battlegrounds in places like Ukraine and Israel. Their impact extends into the financial spheres, notably evident in the dynamics of bond markets and negotiations surrounding oil. Vince highlights that these efforts primarily target restraining Russia on an economic front. However, their consequences have extended beyond geopolitical borders and have now seeped into the financial markets, particularly impacting the trajectory of gold prices. This has marked a significant shift in the economic landscape. As tensions surged, gold prices soared to new all-time highs at market opening. These escalations stem from ongoing geopolitical tensions, such as the renewed conflict between Israel and Hamas following the recent ceasefire termination. For Vince, the surging prices of gold carry greater significance than a mere financial indicator. Instead, they symbolize the government's struggle to assert control over economic matters. Vince argues that such occurrences, notably when gold achieves unprecedented highs, signal a loss of government control in maneuvering financial circumstances to its advantage. Let's get back to the interview.
The United States of America is being attacked on all sides. We are at war right now, not just in Ukraine, a proxy war, not just in Israel, a proxy war, not just in the bond market, as the East dumps their bonds and the West has to buy them, not just in oil, OPEC fighting with Biden over the price of oil, all of this to keep Russia in check financially. Well, the war has now spilled over into the financial markets involving gold. That's a big deal. That's a big deal. And this is why this matters, speaking as an American, as a patriot. The price of gold, if they can't stop this, they've got much bigger problems, because a headline of gold and silver that's making new highs or new all-time highs, that's a comment on our inability. Forget about perception that we have. It's a comment. It's literally a comment on the government's inability to at least manipulate things in their favor. And that's why the empire struck back last night and came out of the woodwork. You cannot have gold printing new all-time highs on a Monday. On a Friday, on a Monday, no, you cannot have that happen, all right? You just can't deny it anymore. Silver, you can do it, right? But you're going to start seeing headlines on gold, and to a lesser extent, silver. It used to be gold is a pet rock, gold is useless. Now it's gold is being bought. Who's buying gold? Those are weirdos. Those are dummies. Those people don't get it, okay? So there's going to be the demonization of gold on the new highs. The headlines today are going to be gold makes new all-time highs. They may not even put that in a headline. And then promptly gets dropped down 2% or 5% from the highs. Gold sucks. Okay? Silver sucks. That's complete nonsense. Now, why is everything a change for the stuff for the worse? The U.S. is at war on 5 different fronts. The resources that we're going to use, the resources that we're using to keep public perception, gold's useless, oil's useless, American bonds are great. That's resources we're spending. And those resources, that's tax revenues that we're spending on public perception rather than fixing what's wrong in the country. And that's a disaster. And it's not going to change. They're going to keep doing that until there's no more money left or they don't get reelected. And there is no more money left. That's why we're using debt now. The problem is our creditors overseas are no longer lending us money, which is why They're going to try and get you to buy more bonds. And maybe you should at the right rate. Maybe as an American patriot, you should. But just know what's going on. What's going on is we are being bled to death as a nation because of our leaders' perception that our leaders need, I'm sorry, start this over. We are being bled to death as a nation because our leaders need to keep things status quo, refuse to change, and they're spending our resources on making things look good. They're buying a lot of glue, gluing broken pottery together when they need to make a new pottery, whatever. You get the point.
The current daily price of gold is at $2,033.26, signaling a bullish trend in the medium to long term. If the price surpasses this level, it might target the main resistance at $2,148.99, suggesting a continuation of the bullish trend. What impact do sudden fluctuations in gold prices and market interventions by influential entities have on gold's future stability? Share your observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.